Well, I want to talk about balanced funds. Now, given the market that we've had over the last 1 year, as we get to the end of this year, it's been fairly volatile, up and down every other month. And I want to ask Dhirendra Kumar really how to navigate this market. And every time I've asked him this question over the last few months, he's recommended balanced funds to various types of investors, especially those of us who are conservative. Dhirendra, I want to go over this with you one more time. Why do you think investing in balanced funds right now, given the way the market is the best idea?
I would say that, even conservative investor or any investor who gets very upset with, the extreme swings of equity, they should look for balanced fund, because balanced fund combine the best of many things. One is that they give you the advantage of equity, they give you the stability of fixed income, they keep you insulated from the extreme, I would say that violent moves of equity that we see in India over the last couple of years. And then they give you the tax advantage of an equity fund, the 30% allocation which is into fixed income. Because it is in a balanced fund, it gets treated, the return on even that fixed income allocation within a balanced fund gets treated as equity. So you hold a balanced fund for 1 year and all your gains will be tax free. So it combines the best of everything. Most investors, they get very brave. Once they have the belief that market is going up, they invest in the riskiest assets, riskiest equity fund. But on a turnaround, they don't like the decline. So balanced fund could be a very moderate, can be a very nice way of participating in growth of equity with great stability and in a tax efficient way. That's why I keep recommending balanced fund to all conservative investors.
But Dhirendra, if we are going to invest in balanced funds, how should we choose a fund given the various choices there are? There are, debt-oriented balance, there are equity-oriented balanced funds. How should we pick one?
When it comes to balanced fund, I don't look for the highest performance balanced funds anymore. Yes, till about 2008, people were getting carried away by the best performing balanced fund, and their time will come again once again there is a belief in the market and market witnesses a secular bull phase. But I would say that the deal with a balanced fund is that I'm looking for return with stability, growth with stability. So I would go for a fund which is delivering me 2-3 things very well. One is that it is conservative with its equity allocation. Either it is a fairly well diversified equity allocation or a large capital equity portfolio. That apart, I would like a fund which is rebalancing the assets very methodically and in a very disciplined way. A fund which is not doing so, which actually works on a broader range. It goes up to 80-90% into equity on sometimes and gets back to 70 and is not disciplined about it, will actually throw me bad surprises. So I would say that a disciplined balanced fund and a balanced fund which is running its equity portfolio in a conservative way or in a fairly diverse way is the way to go. And quite an interesting, options to choose from. One should not be choosing funds entirely based on performance.
We're running out of time, Dhirendra, but I'm not going to let you go before naming a few funds for us. Very quickly, can you give us a few names of balanced funds?
If I have to recommend some balanced fund, I would say ICICI Prudential Balanced Advantage or Birla Sun Life 95 or Canara Robeco Balanced could be a reasonable choice.
All right, let's quickly take in a query from one of our viewers. Manishri has written in, she invested 20,000 rupees in the Reliance Tax Saver Dividend Reinvestment Plan in 2007. She says she received about 11,600 rupees as dividend, which has been reinvested. And so the total amount now stands at 31,000 rupees 600 today. She wants to know if she should switch out of the dividend, reinvest into dividend payout, or should she exit this fund at this point. Dhirendra, what would you advise her to do?
You haven't done a smart thing, because the problem of a tax saving fund is that when you choose dividend reinvestment, the dividend reinvestment also carries a lock-in. It is considered as a new investment, and that money, the reinvested amount, will carry a lock-in period of 3 years. So you cannot pull your money out, all your money out anytime. And so I would say that immediately get your plan changed from dividend reinvestment to dividend payout. So you will be able to get your dividend in cash. You will get it in the proceeds in your account. And the dividend which has been reinvested will carry a lock-in of 3-year period. Otherwise, I feel that Reliance Tax Saver is a good equity fund, is a good tax saving fund. It is worth investing. But the virtue of this, the disadvantage of this dividend reinvestment plan in a tax saving fund is that your money gets locked in even if you don't want to invest in that fund, and that is undesirable. Meanwhile, you can take the tax credit for the dividend which has been reinvested in that Reliance tax saver fund.